Out of the hundreds of companies in the modern space race, the public markets have crowned exactly one dominant, pure-play asset, Rocket Lab. Over the last 2 years, they have executed a deliberate operational pivot. They evolved from a niche provider of small launches into a vertically integrated defense and space prime. The engineering and leadership force driving that expansion is founder and CEO Peter Beck. Under his direction, Rocket Lab has assembled the strongest balance sheet in the new space sector. On the left, a $1.5 billion cash cushion protects operations. On the right, the stock trades at 70 times forward sales, granting a market cap of $62 billion. That multiple exists despite the fact that Rocket Lab remains completely unprofitable on a GAAP basis. Retail and social sentiment largely ignores that unprofitability. For that crowd, the stock functions as the cleanest, most accessible public alternative to SpaceX. But a 70x multiple prices in years of flawless execution. Identifying the actual failure risks requires an analysis of the physical hardware and the operational model. The business operates through 2 distinct segments: launch services, getting hardware into orbit, and space systems, building the technology that operates once it gets there. This stack chart maps out their capacity. The foundation is launch services, comprised of their small-lift Electron rocket, the suborbital HASTE variant for hypersonic testing, and the in-development medium-lift Neutron. Directly above launch sits the space system segment, their fastest-growing revenue driver. They assembled this tier through acquisitions, bringing solar arrays, laser communications, and robotics entirely in-house. This enables a third tier, deploying end-to-end satellite constellations entirely on their own. The foundation of their market credibility comes from Electron. It possesses an extensive, proven commercial flight heritage, providing reliability data that new entrants lack. Owning the launch capability, the satellite bus, and the internal payloads grants them a structural cost and speed advantage over traditional aerospace assemblers who are forced to outsource components. That vertical integration is the moat. It allows Rocket Lab to bid as a primary contractor on billion-dollar government constellations. This operational scale coincides with a massive macroeconomic tailwind, a surge in U.S. defense space spending. The U.S. Space Force budget recently jumped 40% year-over-year to roughly $40 billion, propelled by the Golden Dome Missile Defense Initiative. Rocket Lab is entrenched in these federal defense initiatives. They are a direct and substantial recipient of U.S. government contracts, separating them from purely commercial space startups. They hold over $1.3 billion in prime contracts with the Space Development Agency to build out missile tracking and data relay satellites. They also execute dedicated defense work, securing a $190 million hypersonic launch order and a $90 million Space Force Geospace Domain Awareness contract. Looking ahead, they are positioning the upcoming Neutron rocket to capture a slice of the National Security Space Launch Phase pre-program. Relying heavily on the Department of Defense concentrates risk. A massive share of their future revenue is tied to the timing of federal appropriations and political budget cycles. Rocket Lab is a trusted national security prime. That status guarantees multi-year backlogs, but it means their growth is dependent on sustained government spending. You can track exactly how the hardware stack and defense contracts translate into their fundamental financial reporting. This waterfall chart breaks down their record Q1 2026. They hit $200.3 million in revenue. Space Systems delivered $136.7 million, and Launch Services brought in $63.7 million. This is supported by record high margins and a $2.22 billion backlog towering over their quarterly output. Yet, despite record revenue and margin expansion, the company still burns cash and operates at a GAAP net loss. That cash burn is a deliberate capital allocation. They are pouring money into the development of the Neutron rocket, choosing to invest in future scale, rather than immediately optimizing for net income. This combination of SDA mega awards and the record Q1 print created a catalyst timeline that drove shares to all-time highs earlier in the year. But the stock experienced a sharp mid-year pullback. That drop was triggered by outside forces, specifically the $1.75 trillion initial public offering of SpaceX. The IPO legitimized the public space sector and brought fresh capital into the market, but it simultaneously sharpened the profile of Rocket Lab's most dominant rival. Benchmarking Rocket Lab against the rest of the new space peer group explains why the market accepts such an extreme valuation premium. This matrix compares the peers. Firefly is a direct competitor, but smaller, trading at 14 times sales. Intuitive Machines has a $5 billion cap with mission-dependent revenue. AST SpaceMobile commands a $31 billion cap, but lacks its own integrated launch capability. Structural market mechanics favor Rocket Lab. They benefit from passive buying through their inclusion in the NASDAQ 100 index, and they are a top holding in space ETFs like RKX. But those market mechanics hide a bearish warning sign, a relentless stream of scheduled insider selling by Rocket Lab's top executives. While pre-scheduled 10b5-1 plans are standard corporate practice, the absence of open market executive buys, paired with zero-tracked politician trading, acts as a persistent technical drag on the stock. Rocket Lab is the operational benchmark of its peer group, but heavy insider selling colliding with intense retail momentum creates a highly fragile technical setup. Rocket Lab sits at the intersection of surging government defense budgets and the mainstream expansion of the commercial space economy. They have already achieved the hardest operational milestones in this industry. They proved reliable orbital launch, executed full vertical integration, and secured prime defense status. But because the stock trades at 60 to 70 times forward sales, all of these achievements and all of their future growth are already priced in by the market. The upcoming maiden flight of the Neutron rocket is the single point of failure for the bull case. A successful flight in late 2026 validates their medium-lift strategy, unlocks the lucrative NSSL contracts, and protects the premium valuation. If the rocket suffers another testing delay or fails its first flight, the stock has no valuation cushion. The 70x multiple will compress. Rocket Lab is positioned to lead the public space economy for the next decade. But for investors today, the primary risk lives in the perfection demanded by its stock price, not the reality of its business.